Good to see everyone. All right, let's kick it off with a personal story from a few weeks ago. You may or may not have heard this, but I was at home in Portugal where I live, and out of nowhere, we lost power. All of Spain and all of Portugal lost power. Now, at first, I thought, okay, so what? The lights are out. I can't charge my phone. But then I tried to turn on the tap. No water. So, looks like I'm not showering today. I tried to leave the house, but the garage door wouldn't open. Tried to reach my phone, call an Uber, no signal. Ended up walking 2 miles to work. On the way, I stopped to buy breakfast. Don't take cards. I finally made it to the office. I had to walk up 26 flights of stairs. At that point, I realized something incredibly valuable about electricity. It powers everything. Powers all the systems I took for granted and silently working in the background. And funny enough, it made me realize something. That's the same thing for market data. Don't see it, we really don't talk about it, but you remove it, and the entire financial market collapses. My name is Mike Cahill. I'm the co-founder of the Pyth network, and I'm here to talk to you about finance's best-kept secret. Market data powers everything. But before I start, let's start with what is market data? First principles definition. Number one, it's the bids and offers where traders want to trade. And number two, it's where executions from traders have just executed. All right, the market data ecosystem looks like this. You've got traders at the top, followed by exchanges, and lastly, you've got data distributors. So traders, they send bids and offers to exchanges, and these exchanges are relevant to a specific asset class and a specific geography. Exchanges create this bundle of market data. Again, they're limited to what's traded on that exchange, and these are usually geographically constrained. And because there's a lot of them, you've got data distributors that bundle this stuff together from multiple exchanges and give a comprehensive picture of the market. Market data is financial electricity. It's critical. Without it, you have no idea what the price of anything is. You cannot operate. It's everywhere. It's not just one market. It's not just the lit markets. It's every single market, from the smallest country to the largest country, smallest asset class to largest asset class. And yes, it is highly underestimated. So if you think market data is just used for trading, think again. Market data powers every financial system. Much, much more. So how does one go about getting market data? Now imagine you want to open up a hedge fund. You've got this great thesis on how to do a market data backtest. You want to get connected to everything. What you need is good fucking luck. No, actually, what you really need is access to data from mutual funds, ETFs, bonds, cryptocurrencies, equities, futures. Now, where does this all come from? So if you want to look at US equities, well, there's 13 regulated US equity exchanges, and that accounts for less than 50% of actual volume. So you actually have all these ATSs as well. There's a whole bunch of names there. Now let's go to futures. You've got different names that you have to get connected to. This is just in the US. Move over to the UK, and even different exchanges. Hong Kong equities, of course, different ones, et cetera, et cetera. And to put it all together, well, there's a couple of different data distributors that will sell you these packages. It's more vendors, more money, and more time. Now, what about the process? Okay, this is not your streamlined process. You're talking to sales teams, signing contracts, waiting months, spending millions and millions of dollars. The truth is, the market data economy is broken. It's expensive, it's incomplete, it's slow, and it's controlled by middlemen. The system was not built for access. No, the system was built for control. The cost of market data has gone up over 15-fold in the past 25 years. And this data is still incomplete. You're not seeing everything. It's maybe less than 50% of the data. It's a little bit like buying a Mona Lisa. You're paying top dollar, and at the end of the day, you're just getting something like this. Now, of course, there's still a lot of money being made by selling a broken system. So ready for some numbers? In 2024, the global market data revenue was over $30 billion. And this has grown tremendously. Split about 50-50 between data distributors and exchanges. As you'd expect, data distributors mostly make their revenue from selling data, so it's over 60%. It's been pretty consistent over time. Where we've seen a tremendous amount of growth is on the percentage of revenue from market data at exchanges. It's gone from about 15% to well over 30% today. Now let's think about that in terms of an asset class. 25 years ago, if you were to take market data as an asset class, well, you compare that to oil, Dow Jones, S&P 500, NASDAQ, and gold. It is by far the best performing asset class. Wild. The broken system has really been designed to benefit exchanges. They want the status quo. They want it to stay in place. Now, what if our hedge fund manager wanted to only have one source of data? Pyth originates normalized data that's cross-asset, cross-geography. So remember this whole mess, this ball of spaghetti? We get rid of it. Replace it with Pyth. Straight from the sources directly to Pyth. Cross-asset. Well, thank you. Pyth pays traders and exchanges to supply their proprietary data. Let me say that again. Pyth pays traders and exchanges to supply their proprietary data. Market data revenues in 2024, which I already told you about, traders made exactly about $0. Exchanges made about 14.5, and data distributors made about 12.5. Here are the breakdowns of the Pyth rewards from 2024. Traders made the bulk share of around $35 million in Pyth rewards. Exchanges made about 15, and there's no need for data distributors. Pyth is creating a singular source of truth for global market data by changing three fundamental things. Number one, trust. It comes right from the source. You see the institution who's generating it, the traders and the exchanges that have the data. You can trust that it's coming directly from there. It's disclosed. Number two is transparent. It actually happens on a blockchain. We're familiar with those things, right? You can see every single price and the components that make it up. Finally, it's direct. No hops, latency, or added middlemen. Number two, the experience. You have a single integration for all the asset classes. It's real time. There's no delay. There's no added hop. And because of all this, it can be incredibly low cost. Availability, as I said, you've already got every asset class. It's available both on and off-chain, on-chain cryptographically signed secured, and 24/7. There's no middlemen, there's no aggregators, no one integration. While others are stitching the data together, we collect it from the source. Institutions, Pyth, to you. That's it. Our vision is very simple. The price of everything, everywhere. And here's how far we've come. It's a $1 billion protocol, plus. 120 institutions are currently supplying their data. It supports over 1,300 price feeds. 550 applications have been built using this data across 100 different blockchains. We have partnered with the best. Firms like Revolut, systematic trading firms like Virtue and Jane Street, large crypto exchanges like Binance and Coinbase, and over 100 others. We have been leading the global crypto market in providing data for the last 4 years. But now we're going for a much bigger cake. We have over 1,300 symbols. Earlier this year, we added the S&P 500. It took us 2 weeks. Later on, we added the FTSE 100. It took us about a week. We're very proud of this number, and we're continuing to push it to grow, because where we're looking for is this. NASDAQ has got over 7,000 symbols today. But we're not stopping there. We're going to the 100 million global assets around the world. Price of everything, everywhere. Now, what if you had the price of everything? One integration, all of the markets, any application. Pyth is becoming the electricity for the global financial market. By building global markets with data you can trust. We've built it, it works, the data is live, you're early. This is the beginning of a new data economy, and we're building it together. Thanks very much.